The market is an unforgiving mirror, reflecting not just the economic landscape, but the very depths of human nature, particularly your own. You see 1,000 intricate strategies, a million complex indicators, but rarely do you hear about the one critical factor that dictates ultimate success or failure. It's not about what you know as much as it's about how you think and, crucially, how you control yourself. You feel the allure of the big score, the dream of that one trade that changes everything. But beneath that dream lies a brutal truth. The market isn't interested in your dreams, only in your discipline. The vast majority enter this arena armed with hope and a few charts, only to discover their greatest enemy resides not in the ticker tape, but within their own minds. This isn't a game of skill alone, it's a profound test of your psychological fortitude. You've experienced the pull, the relentless pressure to be in constant motion. You sit there, watching the prices tick, and feel an irresistible urge to act, to do something. This constant need for activity, this fear of missing out, is one of the market's most insidious traps. You believe that more trades mean more opportunities, when in reality, it often means more mistakes and more commissions eaten away from your capital. You jump in too soon, or you hesitate too long, always just a step behind the true movements. This frenetic energy, this impatience, stems from a fundamental misunderstanding of how real money is made. It's not about catching every ripple, it's about waiting for the grand, undeniable waves. You find yourself listening to tips, chasing rumors, and letting headlines dictate your decisions, all because you lack the internal compass to navigate the true currents of price action. This psychological weakness, this inability to sit still and simply observe, is the primary reason why aspiring traders burn through their capital with astonishing speed. You must recognize that action, without conviction, is merely gambling. I learned this hard lesson myself, through countless painful mistakes and the inevitable loss of fortunes. But through that crucible of experience, I uncovered a truth that few ever grasp. The market is moved by human beings, and human beings are driven by their primal emotions, fear and greed. You see these forces play out every day, in every price fluctuation. When greed takes hold, prices are pushed beyond any reasonable valuation, fueled by irrational exuberance. When fear sets in, panic selling takes over, driving prices far below their intrinsic worth. Your ability to observe these forces, and crucially, to detach your own emotions from your decision-making, is the bedrock of consistent profitability. You are not trading stocks, you are trading human nature. To succeed, you must become a student of mass psychology, learning to recognize when the crowd is acting irrationally, when their fear or their greed is pushing prices to unsustainable extremes. Your success depends not on predicting the future, but on understanding the present emotional climate of the market and positioning yourself against the prevailing tides of irrationality. The average man, you'll find, is hopelessly optimistic when he should be fearful, and irrationally fearful when he should be optimistic. You must understand this fundamental paradox. When everyone is piling into a stock, talking about how it can only go up, driven by pure greed, that is precisely when you should be wary. Conversely, when panic has gripped the market, when good companies are being thrown away at bargain prices due to widespread fear, that is often your true opportunity. Your challenge is to resist the emotional contagion of the crowd. You see the excitement, you hear the endless chatter, and a powerful urge to join in grips you. But it is precisely in these moments that you must exercise the greatest discipline, stepping back to observe, to think, and to act against the prevailing emotional current. This detachment is not easy. It requires immense self-awareness and a willingness to stand alone, to be perceived as contrarian, even foolish, by the excited masses. But the profit, you'll find, lies in being right, not in being popular. My greatest profits were always made when I had a clear, definite plan, born from patient observation, and then acted with unwavering patience and firm conviction. You must learn to wait, and wait, and wait for the market to confirm your analysis. This isn't about predicting what will happen, it's about letting the market tell you what is happening. You wait for the price action to undeniably confirm a trend, for the signs to be so clear that even a fool could see them. It means resisting the urge to jump in too early, to catch the very first tick of a move. You were taught that missing the first 10% or even 20% of a move is far more profitable than rushing in and being wrong. This patience saves you from countless false starts, unnecessary losses, and the mental anguish of doubt. When you finally enter a trade, it should be with an overwhelming sense of certainty, knowing that the market has already given you its blessing. Your conviction is not born from hope, but from patient, meticulous observation and the undeniable confirmation of price action. And when you are right, you must have the courage, the absolute conviction, to let your profits run. This is where most individuals fail, even after correctly identifying a trend. You take small, quick profits, fearing that the market might reverse, only to watch your stock continue to soar after you've exited. This fear of giving back gains, this desire for instant gratification, is a powerful inhibitor of true wealth creation. You are taught to scale into winning positions, to add to your stake as the market confirms your initial judgment, pyramiding your profits. This requires immense psychological strength, a willingness to continue believing in your original thesis even as your paper profits swell. Remember, profits are made by sitting tight. It is the ability to endure paper profits, to resist the urge to cash out too soon, that truly separates the million-dollar winners from the small-time players. You must ride the trend for as long as the market indicates it is in force, cutting short your losses quickly, but letting your winners run to their full potential. This requires a unique blend of patience and audacity. The greatest enemy you face in this game is not the market. It is your own ego. You want to be right, to prove your intelligence, to be seen as a shrewd operator. This desire for validation often leads you to hold on to losing positions far too long, stubbornly hoping for a reversal, simply because you refuse to admit you are wrong. You average down, throwing good money after bad, convinced that your initial judgment must be correct. This is financial suicide. You are taught that the true mark of a disciplined trader is the ability to admit a mistake quickly and cleanly, cutting your losses without hesitation. Cut your losses short. This isn't just a maxim. It's the ironclad law of survival in the markets. Your capital is your army, and you cannot afford to let a single battle turn into a complete rout. The moment you realize your trade is moving against you, against your carefully observed patterns, you must exit. There is no room for hope, pride, or stubbornness when your capital is on the line. You must cultivate a detached, almost scientific, approach to the market. This means separating your financial decisions from your emotional state. You learn to view profits and losses as mere feedback, not personal victories or crushing defeats. When a trade goes against you, it's not a reflection of your worth, it's simply a signal to adjust, to learn, and to move on. This objectivity is incredibly difficult to achieve, for money is intertwined with deep-seated emotions of security, status, and fear. But it is essential. You must develop a trading plan based on clear rules and strictly adhere to it, regardless of how you feel on any given day. Your discipline must become automatic, a second nature that overrides the powerful, often irrational, impulses of your emotions. This ability to execute your plan calmly, consistently, and without emotional interference is the hallmark of a true professional. It means doing what is right, even when every fiber of your being screams to do something else. One of the most critical psychological lessons is to never speculate when you are emotionally compromised. You must recognize when your judgment is clouded by anger, frustration, fear from a recent loss, or even excessive euphoria from a big win. These heightened emotional states are precisely when you are most vulnerable to making impulsive, illogical decisions. You are taught to step away from the market, to clear your head, to regain your emotional equilibrium before placing another trade. The market will always be there. Opportunities will always arise, but your ability to capitalize on them depends entirely on your clear thinking and sound judgment. This requires immense self-awareness and the discipline to walk away, even when the urge to get back in or make back losses is overwhelming. Your greatest asset isn't your capital, but your calm, rational mind. Protect it fiercely from emotional turbulence, for it is your ultimate tool. You must understand the profound difference between general knowledge and market understanding. You can read every book, absorb every theory, and still lose everything if you don't grasp the underlying psychology. The market is not driven by logic alone, but by emotion. Your ultimate education comes not from textbooks, but from continuous, disciplined observation of price action and, crucially, from honest self-analysis. Every loss is a lesson, a tuition payment to the market, revealing a flaw in your thinking or your discipline. You must analyze your mistakes, not to blame yourself, but to learn. This continuous process of self-correction, of refining your psychological approach, is what builds true expertise. You are constantly evolving, constantly adapting, always striving to be a better version of yourself in the face of the market's relentless test. This commitment to ongoing personal growth, fueled by the lessons of both profit and loss, is non-negotiable for long-term survival. You now possess the core psychological insights behind million-dollar trades, insights forged in the crucible of Jesse Livermore's legendary career. It's not about complex algorithms or secret insider information. It's about understanding human nature, mastering your own emotions, cultivating unwavering patience, cutting losses decisively, and having the conviction to let your winners run. This is the path of the disciplined few, a path that rejects instant gratification for profound, sustainable wealth. Your success in the markets, and indeed in life, will be a direct reflection of your ability to apply these psychological truths. It demands self-awareness, rigorous self-control, and an unflinching honesty about your own biases. The market is a brutal teacher, but its lessons, once learned and internalized, grant you unparalleled freedom. So, what will you choose? Will you continue to be a slave to your emotions, chasing every fleeting rumor and reacting to every price tick? Or will you embrace the profound wisdom of a master, cultivate the inner discipline necessary for true market success, and begin to make trades that are driven by calm conviction, not chaotic impulse? The market awaits your decision. Your psychological mastery is your ultimate edge, the true secret behind every million-dollar trade. Begin today, by looking inward, for that is where your real power lies.